at the recording. Okay, guys, today is Monday, December the 12th, and we're gonna go with a regular forum here that we do on Monday. Sorry, yesterday on the seminar, we mentioned that no matter what it is, that the euro is gonna trade lower, most likely. That there was at 80% or 90% that it's gonna trade lower into the 132. Into the 132.50 area, most likely. That's exactly what happened. We say that there was a possibility that it went a little bit higher here and dropped. But well, at the end, it decided to sell, and that's what it did. It went lower and hit the 32.50 or 40 area, and even took the 32.10 low on November the 21st. Now, if you guys recall or remember last week, we were mentioning that because we were expecting a deep correction, that if a double correction happens into the dollar, into the S&P, into copper, most likely we should get the chance of a flat on the euro. That's what it looks to be taking place, a type of flat. This is very hard, in my opinion, to count it as an impulse. Now, the way that you can label this also division is different, but I don't know if James, you agree with me. It's very hard to count it as an impulse, because what you're gonna do, 1, 2, 1, 2, 1, 2, 1, 2, and then dropping. If you're gonna take out the euro only, you can take that avenue if you want, or you are very bearish on the euro. But the way structure is telling me that it doesn't look like. The way structure is telling me that there is a combination of a double trip or even a triple trip taking place here. Let me explain to you pretty fast. 1, 2, 3. Right here you got 3 wakes. You got 3 backs, and then possible you either have A, B, and it taking place the C way now that it goes 1, 2, 3, 4, and 5, like it is presented in this scenario. Now, this scenario is the second more bullish. There is, in this scenario, the euro is going to make a recovery, most likely at this stage, to around 32.25, 32.56, and then from there, the euro is going to drop. It's going to drop again and make a new final low. We should know when, with a little more data, we should know which count is the one that is correct. And sometimes, unfortunately, it's like that because nobody knows. Now, another scenario that we have, remember this, what I like about this one is that it allowed me 3 swings. In other words, it allowed me 3 swings from here. We got the 1, the 2, and the 3. And I'm going to explain to you guys why. So that's the first scenario. Second scenario is this one. Wait, this is the same one. Second scenario is this one. This is the most bullish of all. This one is calling for A, B, C, I mean, technically, I'm sorry, the other one is the most bullish. This is the second most bullish. This one is calling for a three ways here, a triangle in the middle, and then from there you need another three ways down. All right? Again, nothing that you can say or pick which scenario is the most, the one in place until you don't get more data. Now, this is the second scenario. This scenario is going to call for a deeper correction here, and then from there another leg before higher. Somebody asked me in direct message why we keep saying higher even when he broke the low. It's because this market, I mean, that's the one that you like, Zach. Yeah, technically this scenario goes pretty well also. The bottom line is this. I want you guys to understand how it works. You need three swing. Yeah, that's another one. You need three swing from here, technically. And I'm going to explain to you guys why. Now, this is the second scenario. This scenario, both should end with the euro around 130, 130, which is the 1.236% of the distance of this one. So the third scenario is this one, which is the one that we were holding as a principle until today, which was the triple zigzag. I don't like it anymore, and I tell you why I don't like it anymore. Because, I mean, it broke below this corrective channel. That's the reason that I really don't like it anymore. I mean, if it's going to be a zigzag, it's going to stay within the channels. That's why I don't like it, because it broke below the channel. So this one, we're going to take it away. I believe it's either one or the other that I presented to you guys. Now, most important than all that euro things is this. Is the S&P cash. Why? Because the S&P did exactly what we were calling, which is telling me that we have the right count. Now, if you take a look on the euro, this level right here is the high on Friday morning in London, or early New York, midday in London, the 134. What is the level? 134. 1 second. And this is why I want you guys to understand where I'm coming from. What I like is this. Let me put the euro here. Let me put it in a small time window right here. You see this high that you guys see right here, right? I mean, this is this high on the euro happened at 6 a.m. New York on Friday. That high goes correlated with this high in the S&P. But because the S&P has a more clear count, when you have three ways here, three backs, like we said yesterday on the seminar, the S&P needs to make a three ways, unless it's a flat, and then you have 3, 3, and 5 hour. Most likely the S&P is gonna recover now for the next, I would say, the end of the day or tomorrow to around 1250, 1242, 1250 area, and the S&P is gonna drop again. So that's going to leave you with the idea of discount. Either the recovery is going to be into the wave 4, or the recovery is going to be like a previous count when you have the triangle and then you end it A now and 3 backs. What do you mean a simple zigzag? From here? That's yeah, but yeah, that's another possibility also. That's another possibility. And then it did a triangle here. But well, let's see how the correlation, I can get the correlation later on today. The thing is that it's possible that you got a wave 4 here on the S&P when from here you have A, B, C, D, E, and the trust higher. Exactly. And then, I mean, it is possible. If it ended here, then the S&P can be almost done. I mean, like that's the triple zigzag. All you know is that you have a 5 here and you have a 5 here. So, like I always do, guys, don't worry about the biggest degree structures. And now, all you need to worry as a practical trader is that from here for Friday high, I mean, you should have, no, cable maybe is not done yet. You have 1, 2, 1, 2, possible 3. I mean, all you know is that that's all you need to care about it. You have divergency, so you are expecting a recovery. Again, the same process. A way for the recovery to take a form. I mean, exactly. Wait for the recovery to take the form, and then you make decisions on it. Don't run. Don't leverage your account. I mean, don't over leverage the account thinking an illusion. Wait for the 5 ways. So technically 2 ways on the S&P. Now, what DV is telling there is a great point. This high right here goes with the low in the S&P. And it looks like the S&P is doing a simple zigzag. That being the case, I'm sorry, the dollar cap. That means the case, it makes the case that possible at around this area, 1222, the S&P can find the low, and bounce. But again, 2 scenarios, all you need to do is wait for 5 ways. 5 ways, and guess what? 3 backs and higher. And then maybe the S&P is ending today the wave 4 of this decline, ending wave 3 is going to make the 4, and euro make another low and down. I mean, like I say, many scenarios, but at the end, I don't care about what the euro does. At the end, this is what matters to me. I'm a market correlation guy, always trade based on that, and all that matters to me is that the S&P did 5 ways here, and either from here, I believe that this high goes first than this guy. And then if the S&P is going to rally to above 1,300 minimum, guess what? The risk trade is going to rally. Call the risk trade, the euro, cable, any of those pairs. They're all going to rally. So you need to adjust your count to those scenarios. Now, let's show you cable. Cable have 2 possible scenarios in my view. I keep the same, I mean, like I call it, I keep the same scenario in cable. When cable, it did a 3 a 3, and possible a 3. Now, this is kind of high right here, so I would rather call cable with a load already. An alternative from here is 3, 3, and then 1, 2, 3, 4, and 5 to reach 155 or 3 in a C-way ending diagonal. That's very possible, and which can happen. So that's going to confirm more that this is buying a 155 cable against 154.17 is a great long, if that being the case. This decline was in 3-way. This decline was in 3-way. So all you need to know is you trace this trend line. If it goes above here, most likely it's done. If it bounces from this trend line to around here, then buy cable here, because that's going to be a heck of a long right there. So those are roughly the two scenarios for cable. Now, let's cover the dollar CAD when we have a trade waiting. This is the scenario that DV is mentioning, and he has a great point there. It looks like, if you take a look at the RSI, if you take a look at the RSI, it looks like the lower rate on the RSI was here, and then it gave a divergency of these lows. This is a very clear 1, 2, 3, 4, 5 ways, which also provide divergency within the 5, which is telling me that this is the count. Now, guess what? S&P, like we mentioned yesterday, we're taking the short here because that's the best short. That's even better than being long euro now. Euro is too weak, guys, too weak. We got too good entry in euros. Doesn't rally, too weak. Now, if S&P is going to rally, this is the short, in my opinion. And guess what? Look, if that being the case, the S&P is doing a simple ABC when it's going to short, we're going to keep the 103.50 area to be the entry, being the case that there is an area of the 618 of this one and the equal legs. If that being the case, and then it's going to lower. This area should be around 12.12 in the S&P. 12.20, I believe. Something like that. But, I mean, that's the path that I believe that the market is taking. Look at the Aussie. And this is telling me that the dollar weakness is not done. The dollar strength, I'm sorry. Send scenario. 1, 2, 3, 4, and 5. A, B, C. 299.34 and higher. And on and on and on, you can find many pairs with the same path. Look at the Norwegian krone. You can make the case also in the Norwegian krone. Look. Ugly as much as you can, but you have 1, 2, 3, 4, 5 swing, 3 backs, the biggest trend here in 3. You got a flat 4, and then from here 1, 2, 3, 4, 5. What you got from there is A, B, C. Either, which I believe is going to test lower. Why? Because I believe that from here you have 1, 2, and it's ending now wave 3 or C. It should end around 584, and then from there you should get a wave 4, and then 588 should prove the 3 ways against this high. But also, DV, look, showing the ABC there. I can see 5 swing here. 1, 2, 3, 4, 5. So most likely that being the case. Let me see EuroCAD. The Euro Pound triangle has been a great call. I was DV call, not mine. Look, a triangle WS and then AB, also showing that most likely we're going to get a little more weakness on the euro, because from here you got 1, 2, 1, 2. It looks like another loss coming in, showing the weakness on the euro. Now the EuroCAD. I like a long, Rafi, but I don't want to take long euro position at this stage, to be honest with you. I like a long. I believe that this was a 5-way, and I believe that it's looking 3 backs. But I don't want to be long euro at this stage. Yeah, it's a good long. I won't take it. I will pass on it, at least now. I need to see it, but I need to see. The euro is very weak. And then the euro is weak. So I would rather wait for the dollar CAD short than taking a long euro CAD position there, because I know that the euro is very weak. I know we have to buy euro because it's weak, but I'm going to buy euro when I see a confirmation that it found the bottom already. I don't pick. And then now I don't have a defined risk in the long euro. That's why I don't pick. I don't take it. You know what I mean? Because if you go to the euro dollar 4-hour chart, I agree with you. Look, this is the 4-hour chart on the euro. Let me take some labor in here so it doesn't look so cloudy. The 4-hour chart looks bearish. I gotta be honest with you guys. Look, if the flag is in place and it looks, put it this way, if the S&P hasn't done the 5 ways or copper have done the 5 ways, I've been selling the euro in some degrees. If the flag is in place, it can go all the way down to 130, 130, even 130 before rally. So I don't recommend. We've been saying since early in the morning that please do not hold any long risk position yet. Because I don't think you need to see. You need to see a type of bottom in place. You have an Aussie that hasn't even passed the beginning of wave A. So how are you going to pick right there? So this, let me put the candles so you guys see it. It's kind of rally a little bit now, but I don't know if you agree with me. For those people that watch the 4-hour, long hour, this looks very scary to the short, to the long side, in my opinion. So very powerful. It can be the triangle, and it's trusting for the triangle. Don't discount that count either. But better wait a little bit. don't rush. Don't rush the trade. That's my whole point. Don't rush a trade. There is no need for it. Market correlation hasn't said yet that bottom is in place in any risk trade. I mean, that we know that the bounce coming in risk, absolutely. Why? Because the S&P is ending sideways. If you take a look to the 4-hour here, I mean, let me open it for you guys. From here, you have 1, 2, the drop. Now, something that I was telling DV is that I don't find a feeble relationship to the market. Look, if you're going to call this 1, 2, doesn't make sense. Right here, it didn't stop at the 1618. That's another scenario, correct? You say from here, right? Yeah, David's is telling me that it can be a leading diagonal from here. Very possible. A series of three-way. 1, 2, 3, 4, 5. That's how you like it. And that goes very, you remember, look, it's giving you divergency with the lows right here already. You remember what I say? I mean, you remember what I say about 30 minutes right there on the room, that I say that this move right here, all it makes is this, guys. I want you guys to understand. This high right here at 42, 47 is completely cement. That takes away anything about 42. Everything. Done. The dollar is bullish. Done. With that new low, in my opinion. Because the flat, this is too small a wave A in a flat to make a flat around about 42, 47. You know what I mean? Because in the case of the flat, the most that he's going to rally, let's say, is going to be to 137 area, 136.77 area. So, in my view, that low right there today, it takes away everything about this level. That now it can be a leading diagonal, 1, 2, 3, 4, 5. Not the most beautiful of the world when it comes to lines, but well, there is technically, you can label it as a 5 big swing, 1, 2, 3, 4, 5, and then if that being the case, it can make a bigger recovery. I don't deny that, to 136, even 138 area if it goes to the 1.236 right here. So with that in mind, you gotta, like I said, you gotta be careful with the long euro as of right now. This looks corrective. I mean, no way that you can label this as a nest. So I would have to say that a rally will happen, in my opinion. A rally in risk is going to happen, but not because the euro. It's going to happen because of the S&P and copper, in my opinion. Any question, guys, that you want? Any question about any pair? I believe that, for example, moving up a little bit from here. Let me get to show you guys. This chart is very, very important. And the rally in risk is going to happen. Don't get me wrong, guys. I'm not changing the buyers. A risk rally is going to take place. We are not changing the buyer. We are being more careful with the euro on to prove you. Yeah, I'm going to go to gold after. Give me 1 second. I think that gold can go, Alex, as low as 1400, 1460 area. Very easy. That's when the equal less come. I'm going to show you the chart. This chart right here, guys, it is very interesting. Now, this, I want you, DV, to pay attention to this one. Because this one can be also become as almost completed correction. Why? Because even though we favor in the scenario when we have A, right here, B, and then 1, 2, 3, 4, 5, and C to complete A. That's a three-wave A, 3 waves back. This can be a flat also. And then being A, B, and C. That's why it's so important, the bounce that comes from whatever low is created between today and tomorrow. Look, the 50% back is at 342, very close. And an impulse rally from here is going to make, in other words, guys, let me put the conclusion here. The risk bounce can happen from the low that is going to happen either today or tomorrow, or can happen with a more delayed low that can take place after 3 waves like it is here. Because if it rally from here, what we're going to say? We're going to say A, B, and C in a flat. You know what I mean? It's possible. Now, a 3 corrective back and another low is going to make a double zigzag. The same with the S&P. It can be a double zigzag or a simple zigzag. That's the way I like it. But I like the bounce in risk either sometimes between today and Wednesday. Like we said yesterday, on the seminar, everything that is taking place, we were expecting. We knew yesterday, and I explained the copper chart, this part right here, very deep, and I say that there was an 80% or 90% that the double zigzag or the rally in risk off is taking place today. That's for copper. Now, let me show you the dollar chart. Dollar is being rallied, and same as a euro is being rallied. I don't like the idea that it went about the 79.27, which can make the case for a new high to take place in the dollar. Now, very important, what you got on the dollar? You have a swing here. You have 3 backs. You have another 5, most likely, all here, with this being a B, do not matter. And then it's the same scenario as the euro. It can be. Now, the dollar is different, because the dollar, it makes the case that this rally here, I can count on a higher degree of confidence a five here, 3 back, and another 5 either to here. Now you can make the case that this is, that this is A, and then you go A, B, C, D, E, and then you have a kind of weird triangle right there, but you can make the case at it. And then we're going higher on the C. It can be the case for the flat also. It can be the case for the leading diagonal. I want to say right here, this how it tests right here. But all those scenarios, they are very possible. I would say this at this stage. Do not pick the dollar yet. Do not buy, sell the dollar yet. Wait a little bit. Wait for 5 waves. Wait for proof that the correction ended, because you can get burnout. My opinion. I see the also in one of my screens here, and I see that hasn't passed the beginning of the A wave. So I'm gonna start buying the dollar when selling the dollar when the dollar cat get to 103.30 area, 103.50. And then from there, I'm gonna start taking a short dollar position. S&P should be clarified from there. Until there, nothing is clear. We were expecting the rally in the dollar today, but we wasn't expecting this type of rally. We were expecting that, let's say from here, make the case here and lower, or lower here and then something like this. That would have been a little better. This is too powerful. So when it's like that, it's better to be a little bit on the side and wait for the market to clarify, because you can get burned out. Don't you agree, guys? What do you mean that index we find the bottom? The S&P? Yeah, I agree with you. Most likely. I like the scenario better of the S&P bottoming tomorrow in a simple zigzag. Exactly. Let me get back then to the regular easy no and show you guys the gold chart and the S&P chart again. Give me 1 second. I like that scenario. I like that scenario, DB. I agree with you. We keep saying the same, guys. The rally in risk should take place based only in S&P and copper. To be honest with you, that's the one that gives me confidence that rally is gonna take place. S&P and copper. To be honest with you guys, I hate where the signals start getting like this. second, guys. So, but I like that, to be honest with you guys, the trade that I like the most in the whole market is the dollar cat, the short cat, targeting 98 area. That's the one that I like the most. Got it? Let me show you. Right here, pretty fast. One second. There you go. Slow is in here. I'm gonna cover now Gore. I hasn't covered Gore. I think that Gore is gonna go lower, like I say, to around 1440 area. I like it at around 1440. Come on, it's very slow here. That's because it's cable data. Cable data is the slowest data in the whole. I don't know why. There you go. Now let me show you guys a lot of questions there about gold. It's no chance, guys. I mean, we've been calling gold lower. Always been calling the gold lower. Why? Because you got a three-way move here and a three-way move. I mean, no matter what it is, it should trade lower sooner than later. Now, idea target, Alex, Bruce, all you guys that I know love right there, Gore, is 1409. I think that it went below this trend line, which is taking away the triangle, even though that we never called the triangle, like we say that can be in the stage of the triangle, but we always say that we didn't like this triangle because it was too contracting here. So for now, I would say lower, but let me point you guys out. From here to here, it looks like it did a three-way move. So he can take any type of corrective structure here. I will look as a goal right now, as a point of interest. I will look an area around 1622. Why? Because it's gonna make two equal corrective wave around that area. You know what I mean? And then from there, you have to wait and see what he does. All I can tell you is this. Ideally, in an ABC, it's going to go to 1400. And this is not a topping goal. I mean, gold is pretty hard. It's pretty hard to start creating a long position because it's not there yet. This move is corrective, which means that because that move is corrective, all it means is that unless it's a triangle, this low is gonna go. You know what I mean? That's what it really means right there. That's what it really means right there. So that's what I like in the 4 hour. I like a short time frame. But at the end, daily and weekly, I like a long. Now, in the short time frame, I believe that it's still within the seaway. Like I say, it did a three-way here. It did a correction back, and now from here, look, it looks like WS. But most important, this move right here is not done. You take a look at the RSI, lows is the low. So even from here, you have to wait 5-way swing. So I think it has a little more downside. Look, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4. Maybe like a S&P is entering a wave 4 right now. And then another move lower there. But at the end of the day, the high is going to be broken unless it's a triangle. The low that we have right here is going to be taken off. This low, what is it? This is in the 1 hour. Ideally it goes to 1400. Ideally. This decline looks very powerful. Ideally, he break in a simple ABC, he break this low and goes to 1400. But who knows? Now, another point of interest is this one. Like I say 1636, 1600. Why? Because if you go with these two, look, say 1620. 1600, that area, if it's a triangle, it's going to bounce from there in 3, if it's a triangle. Otherwise, it's go to 1400. Because this is a different triangle. If it does this, I wish it can be a triangle so we can buy here. That's for gold. And please, now, the euro yen. 1 second, they're asking me there about the euro yen. Let me see what he's done today. It's the same scenario as the euro. Can be a flat. It hasn't taken the low yet, right? No. But it can be a flat. But it's very hard to count it as a nest. No, that's no issue, Alex. That's okay. But you understand the thing with the goal, right? This is very hard to label it as a nest or even as an impulse. Let me show you. Like I said, guys, I don't think it's time yet to be long risk, in my opinion. Not yet. Wait a bit. Look, this is the short time frame, the way I like it. A, B, C, D, E, triangle here, W, 3 backs. These 3 backs correct this whole move. Now, let me see one thing. Bigger than 1. I mean, it's more than, let me see. Yeah, it cannot be a 5 because the 3 is the shortest one. So it needs to be corrective. This move right here, let me tell you some Fibo. Correct to the 50%, these 3 weeks. So what you expecting 3 weeks from here? Now you can make the case for the triangle. So A and then A, B, C, D, E, and the C way. Who has the Holy Grail? Who knows which one it is? It's a very tough call. I mean, I would say this, that the moving risk coming, so you gotta wait a little bit for it. Let me show you another pair before we finish here. Let me see what he did today. It was very lagging. It's the Singapore dollar. Look, it's making it harder here. Because from the lows, you have a clear 1 swing, 2 swing, and then you can make the case 1 swing, 2 swing, 3 swing. This high is, let's see if it makes a high. This high is 39.240. So technically, this get more complicated. Why? Because from the lows here, you have 1, 2, or 2 here. Then you have 3, 4, 5. This is telling you that you need a 6 and a 7 before correction is over. That's what I say. Gotta be careful with the long risk trade yet. Better wait. Wait at 24 hours, giving it 24 hours to see how the market reacts. Maybe it's not what everyone is thinking, but I see the S&P and copper, and I keep the bias that the bouncing risk is coming. Because right here on the Singapore dollar, you see a clear 1, 2, 3, 4, 5 swing here. You're assuming that this is a 5 or a swing. And then you can put these two together. So you have a 3-way swing here. It went to the 50 back. So it's telling you, that's telling you right there, screaming, that continuation of the risk trade is coming. So you gotta be careful. Any other question, guys? Any other pair, any other question that you guys want me to cover? Okay, guys, there is no more questions, so let's leave it there. And let's leave it there. I will keep covering as usual on the room. The recording is going to be a little bit later available for everyone to watch. All right? Okay, guys, everyone have a good day. Thanks.